Welcome to Cryptocurrency Explained. In this lesson, I'm going to cover some of the most common mistakes that new cryptocurrency investors and traders make. Here are the top 10 things that you need to know to watch out for as a new investor. The first is, of course, not taking your security seriously. I know in this video series I have discussed the topic a lot, but it is very important to take the custody of your crypto assets seriously. Do not use an exchange as a bank. It is not a bank. And the internet is full of sad stories of people who thought that the exchange was a bank and they lost all of their cryptocurrencies. The reality is exchanges get hacked, founders die in mysterious circumstances, and the crypto just disappears. All sorts of crazy things take place, and exchanges are major targets for hackers. There are, of course, also many stories about wallets that have been compromised because of sloppy storage of private keys. Please go out and buy yourself a hardware wallet. My go-to hardware wallet is the Ledger, but I also have a Trezor as a secondary storage device. Links for both of those down below if you haven't got one already. Number 2, speaking of security, get two-factor authentication on all of your exchange accounts. Make sure that you use a Google Authenticator, not text messages for two-factor authentication, because SIM swap attacks happen all the time, particularly in the USA. This secondary step is an absolute must for your security and has personally saved me before. Number 3, not doing your own research, believing the FUD, blindly following the ideas or trades of social media personalities. No one is here to hold your hand. You need to take responsibility and make your own informed decisions. It is your hard-earned money. You need to decide what to do with it. You are ultimately the one responsible for your investment decisions. It's empowering, but it can also be scary. Please take the time to do your research and empower yourself. Number 4, take time when sending your crypto. Always double check to ensure that you are sending your cryptocurrency to the correct address. Many people have lost cryptocurrencies by simply sending it to the wrong address. Please take your time, because once it is sent, you can kiss your crypto goodbye. Number 5, mining. Yes, there are now actually printing machines for money. It sounds absurd, but that is exactly what cryptocurrency miners do. They mint new money. And yes, you can make a great profit by mining, but do not just run out and buy a bunch of secondhand cryptocurrency miners or even new miners without doing a lot of research first. Miners are loud and they need a dedicated space. Make sure you have that. Miners are expensive to run and require cheap energy to be profitable. Miners also often require at least a basic understanding of technology to set up and maintain. Miners get outdated very quickly as well, and mining is a high competition industry with a very high turnover of machines. Please do a lot of research before buying any equipment. Also be aware that you will usually need to pay a large customs fee for importing a miner from China, which will decrease, of course, your profitability even further. Number 6, do not invest in cloud mining. You will lose your money. Almost every single company that offers cloud mining is a total scam. And the very, very few who might have a sliver of legitimacy have terrible terms, no transparency, terrible customer service, and margins that are super thin and fees that are super high, you are almost guaranteed to lose the majority, if not all, of your money by investing in cloud mining. Invest in your own equipment or just go and buy the crypto and hold on to it. Those are your options. Number 7. FOMO. Oh, this is a big one. When the hype train builds up and all of the social media accounts are saying that this cryptocurrency is the new paradigm. And even your Uber driver says that he just put his life savings into this new cryptocurrency. Don't know why I'm just throwing Uber drivers under the bus there. But you start to get that strong feeling that everyone else must know something that you don't know. Therefore, you should ignore all of the warning signs, ignore all of the technical indicators, and run out and buy this amazing new paradigm-changing crypto. But by the time it gets to this point, it is usually the absolute worst time to buy. In fact, the people in the know are either selling at that point or have already exited. A crypto experiencing this kind of hype will have likely reached a peak price for that cycle, and you are likely to lose money by getting in at the top. Patience is absolutely key here. If you really like this cryptocurrency, then wait for it to cool down. Wait for when no one's talking about it. And if you miss the gain train, then be patient. Another train is just around the corner. Number 8. And this kind of relates back to number 7. So if you did FOMO and lose, then you start revenge trading. Basically, you lose on one trade, you get angry, and you run straight to another trade to try and cover the loss. Rinse and repeat until you're broke. Another one that I can add into this is basically overtrading. This comes from a similar place. Chasing candles, chasing Lambos. This is another way to get broke quick. You have to take your time. You have to be patient. Wait to find the setups and investments that will bring the right profits for you at the right time. Number 9, the gambler's fallacy. Winning once or many times does not mean that the next trade or investment will pay off. Don't let your ego take over. The market does not care about you. It doesn't care about your ego, and the market certainly doesn't care about your money. Avoid going all in on risky trades or investments. Even if it worked in the past, chances are you just got lucky. Number 10, and this is a critical one, and that is not having a strategy. It is so easy to let greed take over. Has your crypto just pumped up like crazy? Well, maybe you should consider taking some profits. The inability to take profits is one of the biggest mistakes that new investors make. A given crypto will not go up forever. Having a strategy and having price targets will help you maintain the discipline needed to make profits in crypto. As an example, I buy Stellar Lumens for 10 cents. Now I plan to make my first sale at 20 cents. So maybe I'm just gonna sell 10% just to take a little bit of profit here. My next sales target is 30 cents. So I'm gonna sell another 10%. Maybe then I'm gonna wait for 50 cents, then I'm gonna sell 30% of my Stellar. So that's half of my Stellar gone. And then the moonshot's gonna be $1. And when it gets to $1, I'm gonna sell the rest. Or maybe I sell half to recover my capital when it reaches 20 cents. And then I just let the rest ride because now it's free cryptocurrency. I've got my capital back. So I can just let that go to the moon and feel comfortable about it. Now you can decide to hold everything until $1, and that's totally fine too, so long as that's your strategy. But that's a long time to potentially have your capital locked up. But if you have a plan, it's going to make you much more likely to succeed and actually go through and take your profits when the time comes. You have to decide on the numbers that work for you. The real challenge is going to be, though, is that once you have seen your investment go from 10 cents up to $1 is sticking with your original plan that you wrote when you bought the cryptocurrency and actually selling your crypto and not getting greedy, not sitting around hoping that, hey, it's going to go to $2 and then you ride it all the way back down to 10 cents, losing all that profit potential. You have to be disciplined. Don't get married to an investment. It's an investment. These numbers are just, of course, to give you some ideas. You are going to need to figure out what works for you on any given trade. And there will be so many individual situations, but just make sure you have a plan. And remember, if you never sell, you never make a profit, guys. Also, something very important to mention is that you do not always have to sell into your local fiat currency. You can also sell into Bitcoin. Many people use this as a long-term hold, or you can hedge off into gold using Digix gold tokens, for example, or you can trade out into a stable coin like DAI, which is pegged to the US dollar. Okay, and an extra. You know, we're all about value here on the Crypto Lark channel. So the next tip, don't do blind trading. If you want to trade, and please keep in mind that 90% of traders lose their shirts when trading. But if you want to trade, if you want to be in that 10% that can profit, then you had better get serious about figuring out how to do it. Learn to read the indicators, understand the trends, and invest in your education. While there are a lot of great free resources online like Investopedia, you should actually consider investing a bit of money to learn a much more in-depth and structured way about trading. While there are a lot of great free resources online like Investopedia, you should actually consider investing a bit of money in order to learn about trading if you are actually serious about trading and making money by doing it. That's, of course, if you don't just want to buy and hold long-term, which is very worry-free. If you do want to do that, then please check out tradercobb.com. This is an excellent paid service run by my friend Craig Cobb. He provides amazing amounts of specific directed content in order to take you from being a beginner to an advanced trader by giving you all of the insights that you need on how to spot trends and giving you access to a supportive, collaborative community of trading enthusiasts and experts. Craig is also offering any of my subscribers a 10% discount on any subscriptions if you use the link down below. And one more, I can't resist. Okay, just one more, I swear, guys, and that's it. And that is entering a trade or investment you can't exit is a big mistake that many people made. Have you just found some super low market cap gem that you think will be the next big thing? Well, sometimes it has a low valuation for a reason. And many cryptocurrencies at the bottom of coin market cap are very illiquid. That is to say that they are listed on very few exchanges and have almost no volume. And almost no one is looking to buy that cryptocurrency. Be careful. Volume is super important, and being liquid across the markets is also super important. If a coin lacks these things, then it may be very unwise to put your money into it, as you may never be able to exit that investment. And as a final word, I would encourage you to be part of the cryptocurrency community. The crypto community is amazing, and there are lots of great ways to go out and get involved and participate in the community. Join up with Telegram and Facebook groups, participate in chats over on Twitter, and of course, most importantly, make sure that you connect with people in your town who are also enthusiasts of cryptocurrencies. There are regular meetups and conferences all around the world in many of the world's major cities. Chances are there is something happening in your neighborhood this week or even this month. Meetup.com is a good place to get started. I hope that this information has been useful for you. I know that some of it was already covered in my top crypto tips, but some of these things are so important that they need to be repeated. Anyway, thank you so much for watching. Check out the next video in this series to learn even more about cryptocurrency. And of course, feel free to post any questions that you may have down below in the comment section. There you will also find my top recommended list of exchanges and wallets. And if you found this information useful, leave a thumbs up on it. You can also subscribe to the channel if you are new around here. Long live the blockchain, and peace out till next time.